So welcome everybody. This is Carl Klein with the Washburn University Small Business Development Center out of Topeka, Kansas. Today we've got Tom Byler out of our office and Mindy Lee, our marketing director out of the Pittsburgh State University office, and our celebrity guest, Carl York with the Kansas Department of Revenue here to talk to you about sales and use tax for construction contractors. So this is a very informative session, very fast paced. If you have questions, please put them in the chat and we will try to moderate those the best we can. We've got a fairly small group, so if you want to raise your hand, that could work also. The chat tends to work best, so we can interject the questions at a good time for Carl. And then if we want further information, we can take you off mute and get an update as far as that goes. So I'm going to go ahead and put my contact information in the chat. If you need anything from the Washburn University SBDC, just reach out to me and we'll get you connected with an advisor. We can provide additional support for you and your business above and beyond the tax workshop. With all that said, I'm going to let Carl York take it away. And unfortunately today we don't have the April Fool jokes, but I'm sure you can come up with some jokes for today, right, Carl?
Oh, well, I don't know. We'll see.
Okay.
Like you said, I'm Carl York with the Kansas Department of Revenue. I just need to let you know by attending this, we'll not flag you for an audit, so don't worry about that. I won't turn you in for an audit. A lot of people kind of get afraid of that, especially when I'm live in class. And people want to try to give me an alias or whatever. But I go out and I'm on the front end. I teach this. I'm trying to make you audit proof. So this is sort of like Vegas. Whatever's said here stays here. So I'm not going to turn you in or anything like that. I'm trying to teach you how what the sales tax laws are to help you with that. With that said, whatever I tell you today is not binding to the Department of Revenue, simply because it's actually just not me. It's every representative of the Department of Revenue, but simply because until they audit you, they don't really know exactly what you're doing. Sometimes one factor can change taxability. We kind of have a running, it's not really a joke, but kind of a running phrase here. The true answer to most taxability questions when it comes to sales tax is it depends, because there's just so many variables. What you may not realize, though, is there is something called a private letter ruling. It's in statute, it talks about that you must be registered, which means you have a sales tax number. You're registered, have a sales tax registration. That means you are in business. And so you must have an actual situation, an actual scenario happening. And you can write in to ask about that situation, whether that is taxable or not. It's not designed for hypothetical questions. So if you write in for a hypothetical question, they'll likely just refer you to a publication, sales tax book, because since it is binding, they can't give you hypotheticals. With that said, since it is binding, they're only going to answer the question that is asked. So if you ask a direct question and it's just very short, it's just going to be a very short answer. So you need to make your questions as detailed as possible with as much information as possible. And a lot of times, like I tell people, pictures do help when you're describing something, especially for contractors, talking about, well, this is attached to here and this type of thing. You got to realize we're tax nerds and we're not contractors, so we don't necessarily know your industry inside out. We can tell you the taxability of something once we see it or hear what described. So sometimes that helps. Now, when I say pictures, I'm talking about the kind you take, with your phone or with a camera, not hand drawn. No offense to anybody. I'm sure there's plenty of artists out there, but we've had some hand drawn pictures that were not by people who were artists. It just was not their calling, but those are hard to interpret. There's a publication available on the Kansas Department of Revenue website I'm going to be referring to. It's the Sales and Use Tax for Contractors, Subcontractors, and Repairmen. This is the KS-1520. If you typed in the search field on the Department of Revenue website, you need to put the dash in there, that minus sign, KS-1525. If you don't put the dash in there, it won't be able to pull it up. It needs that dash. That's why I'm always saying KS-1525. The other publications, the KS-1520, the exemption certificates. But it'll pull up this, and it has this particular publication is available as basically, I think they call it HTML. It's web, but it also has the PDF you can print off. So some people find it easier to look at as a PDF. Personally, I do. Some people like it as the HTML. But I'm referring to this publication. I need to update this book, which hopefully I'll be getting to that this summer. But in the book I'm looking at, it's around, page 26 under the written rulings section. There's policy information library and written rulings. And there's a section there that talks about private letter ruling and how you would do that. So basically what you would do is you would email your request for a private letter ruling. The email address is kdor_tac@ks.gov, which it's on that page in that book. So then in the subject line, you write request for private letter ruling, attention, policy and research. And that way it gets to the right department, and then they can answer your question. And then that is binding. So what that means is if whatever you ask for, you receive the letter that says, well, based on the information and it's factual and everything, they say that's exempt. Well, an auditor says, well, that looks taxable. Well, that ruling is binding. So that's your get out of jail free card, so to speak. Now this class is, we call it contractors. So it's construction contractors. The definition of a contractor for sales tax purposes with the state of Kansas, in layman's terms, is somebody who installs or applies tangible personal property into real property. Tangible personal property in statute defined basically is something you can sense with your senses, a physical item. So that'd be, could be a pipe, wire, concrete, roof, that type of thing, a sod, flowers. So, you know, anything you're installing into real property. Real property is buildings and land. So the difference in the sales tax laws, you're working on real property, whereas regular, what we call regular retail sales tax, they're working on tangible personal property, not real estate, not real property. So the difference in the laws is when you're working on real property. So that's why an auto mechanic, yep, they have parts and labor, but they collect tax on the gross receipts. They don't, when it comes to sales tax laws, there's no designation for residential. There's no, for us, there's no separation in the parts and labor. It's all taxable. For construction contractors, that's where it's different. 2 parts to a contract, that type of thing. So hopefully everybody can see the PowerPoint I have on the screen there. For contractors, it's already twice as hard as a regular retail business. There's 2 parts to a contract. There's materials and there's labor. And the way we try to put it is if it's not the materials, we consider it to be labor. And what we mean by that is for taxability, if it's not the physical materials you're installing, consider it to be labor, follows the taxability of the labor. So a lot of people will ask, well, is the markup, is the overhead, is the equipment rental fee, per diem, profit? All I do is answer that question with a question. Well, was that the materials you installed? Nope. Labor. So that's really how we look at it, because we don't handle the large concepts. That's for you guys. So you see the example there, the contract price, $9,000, $6,000 tax paid materials, whatever's left, labor. That's basically right there. That's, if you can hang on to that concept right there, that'll help you. Now, in Kansas, the sales tax law's imposition is under the Kansas statutes, which is Kansas statutes annotated 793603. In layman's terms, it basically says for the privilege of doing business in Kansas, you must register, collect, and remit sales tax. So the rule of law basically is when you sell something, it's taxable. That's the rule. The exception is exemption. So the rule of law, when you sell something, it's taxable. Being exempt is the exception. So that's what I try to get through to people is, heaven forbid you're ever audited. The auditor's already coming out there with the default taxability. It's all taxable. The burden of proof something is not taxable, that's on you. So what you will do is you'll keep your records to show that you have paid tax or collected tax, as whatever it may be. You'll have proof that you did that, or you'll have a good reason to show why you did not. So your proof why you did not. So that's what we're going to show you. Now, I really oversimplified that. Also in Kansas, the end user is who really owes the sales tax on what is sold. So that's how that works. Well, with that said, this is the first thing that confuses people, and that is the materials. So if you hang on here, it'll start making sense. Well, maybe making sense is strong words. Maybe you'll sort of understand, but at first it scares people, because when I'm telling you the end user is who owes the sales tax, and then when I tell you, well, the law says that a construction contractor is considered to be the end user of the materials. And what that means is when a contractor buys materials for a real property project, for working on real property, a contractor owes the sales tax. A contractor's customer never owes the sales tax. A contractor's customer should never see sales tax on an invoice for the materials, ever, no matter what kind of job it is. They should never see sales tax on materials. You should never be collecting sales tax on materials, period. Your customer should never see sales tax on materials. So once you get that, now I'll be telling you how you get that back, but if you can just, put never see, write that down. Your customer should never see sales tax on materials, because a contractor is considered to be the end user. Here is why. In Kansas, there is no sales tax. There's no sales tax on real estate. When you buy a house, when you buy land, you don't pay sales tax on that. You'll pay property tax, but you don't pay sales tax. When you take tangible personal property, like roofing or wiring or pipe, and you install it into real property, like a house or a building, you actually, at that moment, turn it into real property. That's the second you turn it into real estate. Well, that's the second in this world it stops becoming tangible personal property, becomes real estate. That's the second you became the last person to buy the tangible personal property in the format of tangible personal property. That meets the definition of the end user, meaning you owe the sales tax. The end user owes the sales tax on the materials. So keep that in mind. You were considered to be the end user. There is, I showed you here a regulation that shows, I'll just read real quick this highlighted area. It says each contractor, subcontractor, repairman is deemed to be the final user or consumer of materials used by the contractor, subcontractor, or repairman in construction projects. Each contractor, subcontractor, repairman shall not give, and each retailer shall not accept a resale exemption certificate to purchase materials without sales tax. Okay? So just letting you know, you're the end user. Now, there is a designation in statute called a retailer contractor. So what you need to realize with that is the main thing about a retailer contract is their main business is retail sales. That's what their main business is. So they're primarily a retailer. That's their main business, but they do offer sales that sometimes they will act as a contractor, meaning whatever it is they're selling, maybe they will be installing. That's the point at which you know they're going to act as a contractor. So they're selling this tangible personal property, these physical things. But every now and then they sell something, maybe a water heater, maybe carpet, maybe a cabinet, and they say, hey, we offer installation. Well, once they install or apply that tangible personal property into real estate, guess what? Now they are now acting as a contractor. Well, they buy all of their inventory without sales tax because they're a big retail store. That's what they do. Well, when they act as a contractor, they bought that material without sales tax. Does that mean they get out of the law that says they owe the sales tax? It doesn't mean that. Here's what happens is the second they are acting as a contractor, now they fall under the contractor laws. And so they will pay their sales tax on their next sales tax return. There's a line on the sales tax return called merchandise consumed. That's where you remit tax on the sales tax return. So they would owe sales tax on the materials, on that water heater, on the carpet, on that cabinet, at what they paid for it. So they don't get out of the laws. They just take the scenic route and do it on their sales tax return. It is a lot easier when you're a straight contractor to just pay it right up front. But sometimes it's unavoidable. I mean, just the way they're put together, they're a retail business and they really have to buy all their inventory, tax exempt. Most of the time they buy all of their stuff tax exempt because sometimes they sell the water heaters and people take them home and install them themselves. Some people take the carpet home and install themselves. Same thing with the cabinets. So they buy everything tax exempt, like a retailer, because they are a retailer. But they do act as a contractor. But they don't get out of the laws. When they act as a contractor, they still owe the tax on the materials, just like you. So they don't get out of it. They're not getting a good deal. Now, what rate of tax when you purchase the materials do you owe? Well, Kansas is what they call destination sourcing. So what's the sales tax rate? That means if I'm going to go buy something, I'm going to pay the combined rate of sales tax in effect where I take delivery, since I'm the end user. So it's the combined rate of sales tax, combined state and local sales tax that's in effect where the end user takes delivery. Well, who's the end user of the materials? The construction contractor. So you owe the sales tax rate on the materials where you took delivery of the materials. So where is that? Well, that could be, if you go to the store and pick it up, it'd be right there. If you have it delivered to the work site, well, now it'd be the same rate as the labor. If you have it delivered to your shop, it'd be the rate at your shop. So it's where you take delivery of it. So what I'm trying to let you know is the rate of sales tax on your materials may not necessarily be the same rate as the rate of the labor. If it's delivered to the work site, it's going to be the same rate as the labor. If you're in the same jurisdiction, it's going to be the same rate. But just be careful. That could end up hurting. You don't want to learn about that on an audit. Let's put it that way. So I think I've told people this before. In the Wichita area, I've had some contractors tell me that they've used that to their advantage. Wichita has a low sales tax for the state. It's one of the lower sales tax areas in the state. Their sales tax is 7.5 in the city there. Outside of Wichita, it's typically higher. So a lot of the contractors, they'll have these jobs outside of Wichita, and it's 8 or 9% sales tax. Well, it's 7.5 in Wichita, and they'll go pick up their materials in Wichita and pay 7.5% instead of going outside and picking it up or having it delivered out there. It saves them quite a bit of money on these larger projects. So they just use it to their advantage. Well, that's legal because they're paying the sales tax at the rate where they take delivery. There's nothing illegal about that. They're following the sales tax law. That's destination sourcing. So I'm just letting you know that. Now, if you purchase your materials outside of the state, so here's what you want to do in your mind is the first criteria for compensating use tax is outside of Kansas. You didn't buy it inside of Kansas, you bought it outside of Kansas. If you buy it inside of Kansas, it's sales tax. If it's you buy it outside of Kansas, that's where you go into the other world called compensating use tax. Compensating, you bought it outside of the state of Kansas, and if you didn't pay any sales tax or you paid an amount less than the combined state and local sales tax, then you owe consumers compensating use tax. A lot of people think, well, that's been around since the internet. It's been around since 1937, since the imposition of sales tax. When they had sales tax, they made compensating use tax. It's been around as long as sales tax. Trouble is, most people don't know it even exists. So if you go outside of the state and you bought something, and let's say their rate is less than ours. So let's say you went over to Colorado and you bought 2x4s. And let's say their rate was 8% and our rate is 9%. You owe the difference of 1% consumers compensating use tax. Now, if their rate was 9% and ours was 8%, do you get a refund? No, because you satisfied their jurisdiction, their sales tax, and since their rate was higher than ours, you don't owe anything. You just keep your receipt to show you paid at least an amount equal to or greater than ours. So that's how that works. Now, keep that straight, because remember, sales tax, when I take delivery of it, it's buyer and seller both in Kansas. Remember how we use that to our advantage? Well, when it's outside of the state of Kansas, now it's different. If their rate is less than ours, then I owe the difference in compensated use tax. Compensated use tax is the same exact rate as the sales tax, dollar for dollar. There's no threshold in which it kicks in or anything like that. It is a different tax. So if you are making these types of purchases, you would need to register and get a consumer's compensating use tax number. It'd be identical to your sales tax number, except it'll start with 006. Your sales tax number starts with 004. Also, if you purchase tools, equipment, something you are the end user of outside of the state of Kansas, and you didn't pay enough sales tax or you didn't pay any, you would owe compensating use tax on that as well. If they audit you for sales tax, they will automatically audit you for compensating use tax. And we've had a lot of businesses learn for the very first time there is something called compensating use tax when they are audited. And that is not the time you want to learn there is something called compensating use tax. We have been accused of making that tax. You just made that tax up. Now, like I told you, it's been around since 1937. So every state that has a sales tax has a form of this. They might call it use tax or something along those lines. And they all have differing laws. And speaking of other states, if you do go to another state, you'll hear the word nexus, meaning a presence, a physical presence. If you go to another state and do work in their state as a contractor, well, that is a nexus. So you'll need to contact that state. You're under their jurisdiction, you're under their laws. So I can't tell you their laws. You'll have to contact them and find out what you need to do for them. Yeah.
A couple quick questions on compensating use tax.
Okay.
How do you determine the jurisdiction? Is it where you're based or where your home is or your business is based?
Compensating use tax is destination based as well. So if let's say I buy a tool and I'm a contractor, well, basically that's if I bought it outside of the state and I take it back, it would be my my shop. If I have a shop, a separate location. If I'm just an individual contractor, it'd be my home then.
Okay.
But if I, if it's sales tax and I buy it in the state, it's just, if I go to the store and pick it up, it'd be right there. But if it's compensating use tax, it'd be the your home base typically for that type of thing. Materials could be different, because a lot of times you could have those delivered to the work site, and typically that's where that's going to be. Materials, typically, if you buy materials outside of the state of Kansas and have them delivered, it'll be the work site.
Okay. What if you buy something online, like on Amazon or eBay?
As far as like materials or tools?
Yeah, is that subject to compensating use tax?
If their rate is less than ours, typically they should be collecting now. Right now, there's if they're if they're selling in the state of Kansas, that's what they call a remote seller. Somebody selling, even if they don't have a presence, they should be collecting sales tax in Kansas. So they should be collecting our tax. If they didn't, then you would owe compensating use tax just like you went, drove to another state. And B, again, if it was materials of some kind, you just use where you install it. But unless you do take delivery of it at your shop, you can use that because that would be where you took delivery of it. If it's tools, typically that'd be your home base.
Okay.
But sales tax and use tax in Kansas are the exact same rate. That's basically because we tax everything. We don't have an exemption on food or things like that like other states do, at least not yet. So we'll see. When that happens, then it'll get a little more complicated. If that happens, I don't.
Thank you, sir.
You betcha. Okay, so the materials, basically you're going to pay sales tax on materials, either sales tax or use tax, most of the time, no matter what kind of job it is. There'll be some situations where they could be exempt, but just get it in your head. Most of the time, you're going to owe sales tax on materials, either sales tax or compensating use tax. Now, the labor general rule. Now, I'll talk about the general rule, so don't mean to scare you. General rule, and then I'll talk about the exceptions to this. So there'll be the general rule, and then the exceptions, and then the exceptions to the exceptions. So general rule, you pay tax on materials. The general rule for labor is you collect tax on the labor. That's the general rule. So what is the labor? You're installing or applying the tangible personal properties into real property. Now, what I try to point out is there are some things that are labor that contractors do that are not taxable because they're not really installing or applying. This would be things like mowing lawns, raking leaves, backflow testing. You could just put the word testing there as well. Cleaning. The exception to that in statute, by the way, would be the washing and waxing of automobiles, laundry services. The exception to that is coin-operated laundry machines. So the exception to the exception. Dry cleaning. Excavation, not taxable. So I want you to be careful with this, though, because when you're doing one of these things that are not taxable, that means that's all you're doing. It's not taxable. Okay. So here's what I mean by that. If I'm just testing, that's not taxable. So if I go out somewhere and I'm just testing, that's all I do, that's not a taxable service. But if it's in conjunction with something taxable, then it could be part of what is called gross receipts. So the gross receipts in statute, there's a statute that is the definitions that defines things. So that's statute 793602. Gross receipts is defined as the selling price, and then the selling price has a list that says, well, any consideration. In fact, that's where it starts defining that even barter and trade is taxable, which that's been since 1937 as well. Barter and trade was taxable for sales tax purposes. I like to give the example from the Garden City, because that's one of the best examples that you can have for this scenario. I had an electrician go to a bakery there. They had a receptacle go out, an outlet go out around Christmas time. And so he told the gal that owned the bakery that he has an $80 trip charge, basically $80 just to show up. And he would check that outlet. And so he goes there and goes in the basement and checks the breaker. And he was able to test the wiring, and then he checked the outlet. And what had happened was she overloaded the circuit there, plugged about 15 things or something like that into the one outlet, and just overloaded that circuit. And so he didn't really have to do anything but just test it. And so it was not a taxable service because all he did was test. He just told her not to, plug so many things into it. And so she was fine. She just wanted to make sure it was fine. So that wasn't a taxable service. But let's just change that scenario. Let's say instead, when he tested that, he found out that that receptacle was bad. And so he has to install a new receptacle. Well, he buys those receptacles for, $2 or $3 in the gross, and then he sells them, marks them up and sells them for what, $5 or $10, something like that. Well, now he's installing or applying, and he's doing this because of the testing. They're related. Now that whole job is taxable. Okay. So not just the receptacle, but the testing as well. It becomes part of the whole gross receipts. So that's what I mean by that. That's very important. He
Real
can't.
quick, Carl. Excavation is non-taxable, but the installation of pipe or rock on a driveway on a residence would be taxable.
So it's the excavation is not taxable.
Right.
Now, you cannot separately state testing and the other services. Excavation's a little different. I was just about to talk about the excavation.
Okay.
And I'll talk about residential.
Okay.
Excavation is different than the testing in that you are able to separately state that one. Whereas the testing, the cleaning, that type of thing, you are not. They're part of gross receipts. With the excavation, you can separately state that one. So if you dig a trench, and this is let's say an existing job, and so you're digging a trench on a commercial job, well, digging is excavating, that's not taxable. But then you install gravel, well, that's tangible personal property, that's taxable. And you install pipe, that's taxable. So if you separately state the excavation or separately invoice it, that part's not taxable. The installation of the pipe and all that, that'd be taxable. So yeah, you can separately state excavation, but only the excavation. So keep that one separate. And then we'll talk about here in just a second, Milton, if the job was residential or if it's commercial, like I said. Okay, well, the two exceptions that I give for the labor is the first exception. If the job is considered to be residential, there's no tax on the labor. You're still paying tax on the materials. Remember, two parts, but there's no tax on the labor. So residential, it's a place where somebody would customarily live. So people customarily live in houses. Now, what really people kind of trip over is they say, well, what if somebody who owns it, that's not what we're talking about. Is it a place where somebody customarily lives? So the reason I say that is because what'll trip somebody out is like apartment, the individual apartment. So if somebody lives in an apartment, well, their apartment itself, the common areas, no, but the individual apartment, yes, would be considered residential. So if you do something that affects the whole complex, you could figure the square footage or of commercial compared to residential. If you're working in the individual apartment itself, the unit, then that's 100% residential. So that no problem. So you're still paying tax on materials, no tax on the labor. If you do work in a traditional nursing home, the only part that's residential there would be the sleeping rooms and the bathrooms in their sleeping rooms. The common areas would not be considered residential. Mobile homes that are permanently affixed to the ground, so hardwired and hard plumb, those would be residential. Fifth wheel would not be. That's tangible personal property. Hotels are not. They're considered transient, so those are not residential. So residential, no tax on the labor. See, what is this question? Excavation labor and residential versus commercial. If we install pipe with one machine operator and one laborer, the laborer is taxable, but the machine operator is not. But what if the farm? I don't understand. Let me. I don't quite understand your question. Does the laborer do the installation, or does the laborer just operate the excavator? Because you're asking, I'll come back to that after I go through the original construction, then we go through the construction, so that I'm not confusing people that haven't had the construction, the commercial part here. That way we're keeping everybody on the same page there. So the next exception for labor, first is, residential. The next is original construction of a building or facility. So what I want you to realize, it's a lot of people will call it new construction, which that's fine, but it's only of a building or facility. So a building, basically it's a place where it actually is defined as a structure that houses people and property. So when you hear structure, that means it has walls and roof. And then a facility, they define that as a mill, plant, refinery, oil, gas, and water well, and then distribution lines. The only distribution lines, though, are the ones for rural electric co-ops and then cities, municipalities. They're electric lines. That's the only distribution lines that are facilities. Any others are not going to be considered facilities. So it's only original construction of those. Now, that's important. So there's 5 definitions. So if you do have that book, they start on page 6. The first definition, that's the one that most contractors know about, if they know this at all. The first definition is the first or initial construction of a building or facility. So the first time it's built. So that's your new construction. We will count it as original construction if a structure is tore down to the foundation and built back from that. That's original construction. If it's tore down all the way and it's just slightly over or in that just vicinity right there, that's original construction. If the walls are still standing, though, basically gutted, that's not original construction. So just FYI. So that's the definition most contractors know. And it's the next one that starts confusing people, because you can kind of see how this develops. Somebody had this question, well, what about this? Well, the next one is, well, the addition of an entire room or floor to an existing commercial building. We're talking commercial because if it was residential, it'd already be exempt as residential, right? So what we're talking about there is, you might want to write down this will help you with this one. The addition, in order to qualify for this one, you must be adding usable square footage. That's how you know that will qualify. So because I get the question all the time is, well, it's new construction. Well, if I hire a contractor to come into this room and build a wall, I just took this space and divided it into 2. I didn't add any square footage. I just divided it into 2. But if we knock out an exterior wall and add space, now we've added square footage, usable square footage. And then if we do anything that is to support that new construction, that original construction, for an example, if we have we have to put in an electrical panel, a sub panel to run electricity to that new construction going on, and maybe the electrical room's right here in this existing building, but it's in order to run the wiring to that new construction going on, we would consider that original construction as well, because it's absolutely necessary for that original construction going on. Third definition is interesting. That's one you'll probably want your book to look at, because it has 4 criteria in order to qualify. So The first criteria is, well, the work was called for in the original blueprints, building plans, or specification. So it wasn't just an afterthought. It had to have already been planned for. Second was the completion of the unfinished portion is within a reasonable requisite time of the original construction. So this isn't way down the line. It's in a reasonable time. The third definition,
I'm sorry. What booklet is this out of?
the KS-1525, the construction
Okay.
sales and use tax for contractors, subcontractors, repairmen.
Okay.
And I'm looking on page 6. I'm actually on page 7 now.
Okay, sir. Thanks.
You bet. See, the third definition is the owner or occupant is the first or initial owner or occupant of that building or facility, first time that they're in there. And then fourth is the work would have been performed at the time of the original construction, except for circumstances beyond the owner's control. So that would, we give an example there in the book. We say circumstances beyond the owner's control include unavailability of material, weather, death, or bankruptcy of the contractor. They do not include instances where the owner merely falls short of funds or when after taking possession contracts for additional services. So the example we give for that one would be like a tenant finish. Maybe we have a small strip mall going up and all the slots are filled up with leased out to buildings, but there's one little blank generic box waiting to get filled. And so finally the owner gets a business to move in there. Maybe they're going to get some sporting goods store or something, and they hire you to come in and basically remodel it to make it look like this new sporting goods store. And you're remodeling it. It's a commercial building, and but you need to just go through the criteria to make sure it's going to qualify. And so let's say this happens, a year after this building's built. So you just go through the work. Was it called for in the original blueprints? Yeah, it was always called for somebody to move in there, for a business to move in there. Was it in a reasonable amount of time for this scenario? That's a reasonable requisite of time. It is number 3, it's the first initial occupant of that space. And then the work, the delay was because he was trying to find someone to occupy, to lease that out. So that was beyond his control. So that qualifies as original construction. So you pay tax on your materials, no tax on the labor. So that's a good scenario there where a lot of contractors don't know that exists. So I'm just letting you know. Could be your competition doesn't know that exists.
Two real quick ones, Carl.
Okay.
If you tear out concrete on a commercial driveway and replace it with new, would it be non-taxable because they're replacing the original driveway?
No, that's not a building or a facility. That's taxable.
Okay. And then excavation is non-taxable, correct?
Correct. And if it's separately stated.
So you have to show that separate on the invoice?
Either separately stated on the invoice or separately invoiced.
Okay.
Otherwise, if it's just included in there and you don't separately state it, it becomes taxable as gross receipts.
Okay.
Let's see, the fourth definition is if the work is being done because there's damage due to fire, flood, tornado, lightning, explosion, ice loading, attended winds and windstorms, terrorism, or earthquakes. Attended winds and windstorms, that's wind speeds of 80 miles an hour or more. So that's like Thursday and Hayes. Ice loading, that's the industry for the overhead electrical wires, the amount of ice that accumulates on those overhead electrical wires. So it's not frozen pipes or anything like that. Flooding is natural, so overflowing of rivers, streams, banks, that type of thing. Again, it's not a broken pipe. The vandalism does not count for this. So the ones listed in the book are listed in statute, and that's the only Fire, flood, tornado, lightning, explosion, ice loading, attended winds and windstorms, terrorism, earthquake. Now, the best place to find a lot of the proof of those would be, well, one would be an insurance document, or a fire report, a police report. Some of them would be the Weather Bureau website that reports like the lightning strikes, wind speeds, that type of thing. One that you need to realize it's not on there is hail. So hail, no, just kind of remember that way. I'm not sure if anybody works on bridge or highway. Bridge or highway, that is considered original construction. So if you're working on a bridge or a highway, so that's not a private driveway or a private road, it'd be basically a public bridge or highway. So most of the time they have a type of exemption certificate, like a project exemption of some type, but there are times when that does come in handy, knowing that that is, if that didn't happen, that at least the labor would be exempt as original construction, if you know that. So if anyone works on bridges or highways. So that's 5 definitions of original construction. So you're still paying tax on materials, no tax on the labor if it's residential. I'm going to bundle all 5 of those definitions together and just call that original construction. So when is the sales tax on the labor? It's when the job is considered, let's see here. Oops, I already did that. Commercial remodel. So you know it's commercial if it's a place where somebody does not customarily live. And you know it's remodel if it's not original construction of a building or a facility. So you just kind of reverse engineer residential and original construction. So commercial remodel. So let me go back to the one question we had. Somebody had a question about, I believe, excavation. What was that one? I don't have the ability to look at that one, but I believe it was something about installing a pipe or something in a residence. Was that, Tom, do you know what that question was?
Yeah, I'm looking it up here, sir.
I just didn't want to.
Excavation is non-taxable, but the installation of pipe or rock on a driveway on a residence would be taxable.
On a residential driveway?
Yeah.
No, the general surrounding area of residence is also exempt. So that's why you can, they can have a fence put in, a shed put in. So that would be exempt as well. But basically, if you do like from if it's in town, like a sidewalk, that's now going to be part of the, I guess, the city there. But no, if you're doing a private driveway, that's residential. So all the rules apply for residential. You'd pay tax on your materials, no tax on the labor to install it.
Okay. What about installing tile terrace pipe for farming operations?
Taxable. That one's a big one, because here's why. Because where it's being installed is not a building and it's not a facility. We get that a lot with the irrigation pipe. The irrigation pipe that's in the ground is taxable. We've had to have a meeting on this and have it determined. Where it comes out of the ground, there's a flange, and when it attaches to the pivot, irrigation equipment is exempt. The pipe in the ground is not, because it's not a building and it's not a facility. And this is exactly why I think you were mentioning the parking lot, someone was mentioning a parking lot. That's why a parking lot, if you do just a standalone parking lot, we're going to build a brand new parking lot. Well, isn't that original construction? That's original construction of a parking lot, not a building or facility. Now, if we got a brand new business going in that has a new building, brand new building going up, and the parking lot's going with that, it's in conjunction with the building, it will count as original construction because it's in conjunction with that building. But standalone, no. So hopefully I didn't confuse people.
What about overburden removal at a quarry site?
Overburden removal. Is that like the guy taking too many lunches? Is that what they're doing? I don't know what that overburden removal is. I'm sorry. That one gets at a quarry. Is that like dirt or?
Let me, I'll let.
Oh, excess dirt on top of rock. Okay, I see that now. Excess dirt on top of rock. What do you do with the dirt? You remove it and do what with it? You're not installing it in anything. You're just going to move it, basically.
They put it in a pile and put it back later.
So they're not installing it in anything. They're just moving dirt is what we're saying.
Moving it out of the way, take out the rock they need, and then they put the dirt back in.
Yeah, that's more or less excavation, so that's not going to be taxable. I like the overburden part though. I'm going to start using that for just about everything I do.
Tell your boss you're overburdened.
I'm doing my overburden work. I learned something today. Let me see if we have another question here. Oh, I think we did that one. Okay. Did I get it? I want to make sure I get everybody's questions. I don't want to put you off.
So far, I think we're up to speed.
Okay. Don't be afraid to ask.
I'll holler if we get reminded of one we missed.
Okay. Okay. Yeah, so the contractor sales tax is tough because you have that two parts to it. Let's see, just to clarify, a commercial driveway replacement that is attached to a specific building is taxable. Yeah, commercial driveway, if it's not part of an original construction, that's taxable, correct. Same way with a farm driveway, like their driveway. If you're installing, let's say, gravel on there, that would be taxable. Now, if you're just grading it and doing nothing else but grading, that's not, because that's excavating. But if you're installing gravel, that's taxable. Or if you're laying down concrete or asphalt, that's taxable. But the commercial job you're talking about, the driveway, if it's not part of original construction, as far as a building, original construction of a building, if it's not in conjunction with that, it would be taxable. Okay, now I kind of browbeat you about the taxes on those materials. You're paying the sales tax or that compensating use tax. Well, here's the thing. I was trying to put an emphasis on that your customers should never see sales tax on materials. Okay. Here's the reason why I did that. They should never see sales tax on materials, but here's the thing. They're going to feel it. You're just never going to call sales. You're never going to call it sales tax on materials. Remember, I said if it's not materials, it's labor. So you're going to mark up your materials. You're going to charge your customer more for your materials than you paid for it. You have to recover your costs for what you paid for them. So that's how you do it. So you're going to charge more for your materials than you paid for it, and that includes your sales tax. Okay. So you're going to charge your customer more for that. So that portion from, okay, my tax paid. So when I say tax paid materials, that means the amount I paid plus the sales tax, that total amount, that's tax paid materials. From that point on is markup. From that point on Is that part taxable? Well, since that part's labor, that's what I'm telling you here on this slide. I'm saying, well, the markup on the material basically is dependent on what kind of labor it is. So the top there, I see the markup on materials on residential or original construction. The markup on materials is not taxable when the labor is not taxable, because the Kansas Department of Revenue considers the markup of materials to be labor. Thus, if the labor is not taxable, the markup of materials is not taxable. And then I say, well, on a commercial remodel job where the labor is taxable, basically it becomes taxable because it's labor. So, I hate how you have to do this. You pay tax on those materials because you're the end user. Don't ever show tax on the materials, though. Here's the thing, because you're the end user, well, you get your tax back because you don't call it tax. It's now part of the labor, that markup portion, as far as the calculation of sales tax is what I'm saying. Okay. Now,
Go ahead.
Yeah.
Integrated production machinery and equipment exemption. Is there any expiration date and maybe a brief explanation of this as far as being tax exempt?
Well, I'll go into that when I go over exemptions here in just a minute, but
Okay.
There is an expiration, sort of. There's not one written on there, but there is sort of one. So I'll explain that here in just a second. Let's see here. So here's the reason why, since the markup of materials and you got to recover that, we recommend that you invoice. There's two ways to invoice, basically. One is you itemize and show the sales tax. And basically that's how, when you go to the grocery store, you go to a restaurant, they show the sales tax. That's customary. There's another way, and I put the statute there, 793668, that says, well, so long as you put this language on all your invoices, you don't have to show any sales tax. That language is all applicable sales tax included. And I put the language there. Now, if you don't show the sales tax and don't put the language, whether you collected that tax or not, it's going to be assumed that you didn't. And they'll, if you're ever audited, heaven forbid, they will apply sales tax, penalty and interest. So you don't want to do that. But here's the reason why we recommend you do that, all applicable sales tax included, and not show the sales tax. Well, first of all, we don't want your customer to see your markup. That protects you. And your customer could be another contractor, could be a general contractor, that type of thing. Now, I just showed one price here just to make it simple, but you could also, still show, here's my materials, here's my labor. Don't show sales tax, put all applicable sales tax included. Because remember, the markup on the materials is part of the labor, but it may still be, you still might want to show it as a cost of the materials. The markup of materials may just be part of the sales tax base as far as the calculation. So that you want to show it that way. So again, using that all applicable sales tax included, you can do that without your customer seeing that happen. Because when you file your sales tax return, you will be backing the sales tax out. Now, a lot of people kind of freak out when they say, well, my tax paid materials, how do I do that? Well, when you file your sales tax return, you will report that this sale, the whole amount, including your tax paid materials. But then that's in your gross sales. But then in the deductions, you'll deduct your tax paid materials and tax paid subcontractors. There's a line on there called other allowable deductions. So you're showing it in the gross sales, and then you're deducting it right back out. So you're accounting for it, so it doesn't get taxed. So that's how you do that. So a lot of people kind of worry about that. That's how it's not taxed. So that would be that tax paid materials. It showed right in the gross sales, and it's deducted right back out. So let's say you had a bunch of exempt sales we're talking about. Yep, you're going to show them right here, but then they get deducted right back out. So that's how that works. So we'll be talking about exemptions because someone had some exemption questions, and I'll be getting to that one. But yeah, there are some ways that you can have some exempt jobs. So exempt jobs means, well, are there any ways that possibly materials can be exempt? There are a few ways. There's some ways that materials and labor can be exempt. There's a tax exempt entity certificates, there's project exemption certificates, the integrated production machinery and equipment exemptions, and the warehouse machinery and exemption, and then public water suppliers. I'm not sure if we have anyone who works on rural electric water suppliers or public water suppliers that are paying the clean drinking water fee because they have their own exemption certificate. But if you do, let me know so that I can go into more detail. But the tax exempt entity certificate, just real quick on that, on page, I believe it's 14 in the exemption certificate book.
Carl,
It's the
there was a
KL.
question about the integrated equipment.
Yeah, I'm going to get to that one.
Okay, I was on that last page.
Yeah, I'm going to get to that one. That's like third down.
Okay, yeah. Okay, sir, thanks.
Because if I get to that one, people will start asking me about stuff. So I kind of got a method to my madness here. I'm going to tell you what an exempt entity is so that you know that you're not issued an exemption certificate, that I'm going to show you who is and then how the rest of the world works.
Gotcha.
So I'll get them out of the way. So there's only one group of folks really that are issued an exemption certificate. Most people are not. And that's kind of what I'm doing. Now, the exempt entities, that's nonprofit organizations. Now, here's the thing. Just because an organization is a nonprofit organization does not mean they're automatically exempt from sales tax. That nonprofit status is a federal income tax status, state income tax, not sales tax. For sales tax, there's a process. They have to first be either listed in the exemptions to sales tax, which is KS 793606, could be specifically listed or could qualify under one of the categories listed there. Now, if they are listed or do qualify, then they have to apply for the exemption. That means, see, that's not automatic. So then if they apply, they have to be approved. If they're approved, then they have to be issued an exempt entity certificate. So that's what I'm showing you here on the screen is an exempt entity certificate. So this would be like a city, a county, a church, a school. Most of the exempt entities, their exemption is similar to this, and it'll say right on the exemption certificate, their exemption covers direct purchases only. Only direct purchases are exempt through the use of that. So, okay, that's fine. What I'm telling you is, though, if this is what you get and you're a contractor and you're doing work on real property, this is going to, you know, not exempt as much as what they think. And you might want to let them know. And the ones that are guilty of not knowing this the most are churches, but a lot of cities, if they're changing people in the accounting or bookkeeping area, they might have new people that don't know the rules. But here's how that direct purchase, that means the money must come directly from that entity. So it must come directly from that church or that city or that county. So, so if it's a school and if I'm a principal from the school, and I'm going to a home center and I'm going to buy some plywood for the theater because they're doing a play, and I use my own credit card to buy plywood and I try to give them this, well, that's my money. And I'm telling them, well, hey, the school's going to reimburse me. That's not exempt because the money's not coming directly from the school. The school's the tax exempt entity. In fact, it says right on the exempt entity certificate down under the retailer information. Second bullet, it says payment must be made by the entity on their checking account or on a credit debit card issued to the entity. Acceptance of cash, personal check, or personal credit debit card is not allowed for a tax exempt purchase. So if there was a direct billing account now with that, I could pick it up and say it's direct bill. Well, that's a direct purchase. If they have issued me a card from the school that comes from the school account, that's a direct purchase. We have a check, that's a direct purchase. So I showed you how that tax exempt entity could be taxable. But if this is the exemption certificate that they give you as a contractor, it's not going to exempt your materials because you're paying for those. Now, if they pay you directly for the labor, that will exempt your labor. If you hire a subcontractor, that subcontractor, it will not exempt anything for them because the subcontractor is going to pay tax on his materials, and then he's going to collect tax from you on the labor. So that's a tax exempt entity certificate. Now, what they can do is get a project exemption certificate. That's what they need to do. And that's what they want to do. They just sometimes forget because it'll say right on there that indirect purchases are exempt through the issuance of a project exemption certificate. They have to apply for that, by the way, for every project. They can never just blanket one. They do a project exemption certificate. So they apply for it. Typically, they do that online, and it has a start date and an end date. So, if they give you a project exemption certificate, then that will exempt your materials and your labor. And you can give one to a subcontractor, that'll exempt their materials and labor, that type of thing. So how that works is they will give you a project exemption certificate. There is a sample one, by the way, in the contractor book, the 1525. It's toward the back of the book, page 37. This is the exempt entity type. It's the PR 74, start date and end date. It has a section on that project exemption certificate that has the vendor name, has a purchaser, that has contractor, subcontractor on that. What they're trying to do is use this and capture everyone that could be involved. It kind of messes people up a little bit, but what you want to do is that very first project exemption certificate, you're going to want to, you're the vendor. You're selling them your service. The church is going to be the purchaser. You know, put your finger, cross out the contractor, subcontractor. Say, you're the purchaser. Yeah, their information is going to be down here, but have them be the purchaser and sign this one and give that one to you. Then have them give you one that's not filled out. And you're going to make some copies of that one. That's the one you take, and now you're going to take that to your vendor and buy your materials. Make sure you don't buy your materials before that start date on the project exemption certificate. Because if you buy it, it can be 1 day before that start date. It says right here, not valid on purchases made prior to. That means if it's prior to that date, it's taxable. So that's what I'm saying. Wait till you get the project exemption certificate. Let them know this. Now, the end date, you can see that one coming. So if it starts getting toward that end date, go back to that church or that city or county and say, hey, call the state, ask them to extend that. It's not a big deal. Adina's the gal that does that, and she'll say, well, how much time you need? No problem. New one's out there, print it off. Send you an email or whatever, and you can get another one printed off. It's not that big a deal. They'll do it lickety split. So now you will take this. So you remember they have one made out to you, put that one in your records, heaven forbid you're audited. And then you got a blank one and you made a bunch of copies of it. And now you're going to hire a subcontractor and you're going to give them one of these. Now you're going to be the purchaser, but contractor, and they're going to be the vendor. You're going to make one filled out to them. And then you're going to give them one not filled out and tell them, hey, go make some copies of that because that's how you buy your materials. That's how that works. Because a lot of times I'll get calls from contractor and all they have is one that's filled out and they don't have a blank one. And they'll say, well, how do I go buy my materials? Well, you go back to whoever gave that to you and have them give you one that's not filled out. That is a project exemption certificate. There's another project exemption certificate that's it works exactly like this one, except it's called a enterprise zone or an HPIP project exemption certificate. And it would be for a for-profit business. That's how you would know that. So they would be hiring you. That one starts at the Department of Commerce. They have to be approved through the High Performance Incentive Program income tax credit. So that's the starting point. Once they are approved, then it comes over to one of our economists who would then approve the project exemption certificate. That is it works the exact same as far as the project exemption certificate. Here's the only difference. You're going to be starting on that project about a third of the way before you actually get the project exemption certificate, meaning you'll probably have already paid tax on materials. That one is different in that you are allowed to get a refund on that one, has its very own refund form. It's different than the rest of the refund forms because of that process. This one, the first one I was talking about, you can't get a refund on that one. The HPIP, or Enterprise Zone Project Exemption Certificate, you can. There's also another project exemption certificate. It's for farmers that raise cattle, chickens, pigs, dairy, that are building a building that's the cost of more than $50,000. And again, it's going to be very much like this. It's applied for again through that economist. So if you're ever doing work on a farmer and they actually have a project exemption certificate, that one will actually exempt the materials and labor for that project. There's not too many of those out there though. So those are issued. Now, the integrated production machinery and equipment exemption certificate. And that one is in that exemption certificate book. I believe it's on page 25. That is basically manufacturing. That is for manufacturing equipment is basically what we're talking about. There's also the warehousing, but the manufacturing equipment itself. So you can take one of these and you can, if you have a contract work on, I don't know, one of these big manufacturing companies, and you have ongoing work there, this will exempt the parts for that manufacturing equipment and the labor to install it and that type of thing. It does not exempt any real property though. So that does not exempt the building, does not exempt the floor, does not exempt the lights, does not exempt the break room, that type of thing. But the equipment itself, if you have like work going on, you can blanket this, but if it goes longer than 12 months in between work, you'll need to get a new one. Or if a different type of work comes along, you need to get a new exemption certificate. So expiration, none written on here, but the expiration would be more than 12 months goes between the time you've done work for them. So that's sort of the expiration on that. So this is one that a lot of the manufacturers kind of, they're sort of like the farmers in that they think, well, since we're a manufacturer, we're exempt from everything. Well, if you notice, they kind of put it in the title, integrated production machinery and equipment. Have to be, it's designed for an integrated production. It's just so in the statute under 793606 KK, it talks about the manufacturing integrated production machine equipment exemption. It talks about they have an integrated production, an integrated process. And it says this manufacturing production plant would be recognized as an industrial manufacturing production plant or an agricultural commodity manufacturing processing plant. So what they're saying is with this one is it's not designed for some guy working out of his garage. It's industrial and it's an integrated process where several processes are going on at the same time that are interrelated and integrated. So you're looking at an assembly line. That's what it basically is describing. Let me see, what was the question about the integrated production machinery equipment? Let me go back to that one, make sure I get that one answered.
Said integrated production machinery and equipment exemption, any expiration date, and maybe a brief explanation of this.
Oh, okay. Well, I guess I kind of done that. Yeah, it's going to be for manufacturing. And it's one they fill out, so it's not issued. So they just print this off. If they don't have one, you can print one off and have them fill it out and sign it. And this was what you'll take to get your materials for that, that type of thing. A lot of electricians and plumbers do this. But if you're working on the building itself, that's going to be taxable. If you got to work on their roof, that type of thing, that's going to be taxable. Work on changing lights in there. This is some kind of special light meant for that manufacturing process. It's going to be taxable. Are you doing any work on manufacturing, or have any upcoming that you might have had a question on that I can help you answer? Not sure if I answered your question or not.
That's just typed her to see if she has any other, if you could share any other information with her. She hasn't replied back, so I guess if she does,
Okay.
I'll break in.
Okay. There's one kind of related to that integrated production machinery equipment. It's the warehousing machinery and equipment. And it's, if you think of distribution centers, a lot of times they can use this, but a lot of the commercial grain storage facilities, co-ops use that grain. So people will go have their grain, store their grain there, that type of thing. They'll use that for grain storage. So they will warehouse their grain, so to speak. So that's what this one, it's very similar to the integrated, but it came about, I think it was in 2000. And so what they got is their specific storage equipment for that grain storage, and the grain and the storage area for those distribution centers. Those are, and this is designed for off-site, so they make that clear so that it's not necessarily storage area for the integrated production machine equipment. So it's off-site from that. So someone could have both. They definitely could, if they have an off-site storage, that type of thing. Let's see, somebody did mention agriculture. Did I, if you have more questions on it, feel free to ask, because I'll go back to it. Does somebody work with farmers and do work for agriculture?
Yeah, they were installing tile in terraces.
Yeah, so farm is farmers, their exemption, they have, it's the ST-28F, and it covers, first thing you need to recognize is there's no place for a number on here, because the traditional small farmer is selling a commodity, so they don't sell to the end user, so they don't typically have a sales tax number or anything like that. So there's no number required on that. But it covers like what they call consumed in production, propane for agricultural use, ingredient component parts. And then the big one that this is used for is farm machinery and equipment. Well, what kind of, if you're a contractor, what kind of gets you is they're going to want to tell you, well, I'm a farmer, it's exempt. If you work for a farmer, if it's real property or buildings, it's going to be taxable. Now, all the rules apply. In other words, if it's original construction, you'll pay tax on your materials, but no tax on the labor. Or if you do something at their personal residential house, well, that's residential, right? No tax on the labor. But nothing is for, like, if you go do work on their barn, on an existing barn, that's going to be taxable because that's part of their business. Same way with if something, that big storage area for their tractors or combines, an existing, you go run wiring in there or something, that's going to be taxable.
Okay, going back to the integrated production machinery and equipment.
Yeah.
What about creating space and improvements to house the machinery and equipment? So in other words, somebody's buying a piece of equipment that they need to either build a space, remodel a building to accommodate the equipment.
Yeah, that'd be taxable. Unless, it could be if they're doing an addition, that could be original construction, but it wouldn't be exempt under integrated production machinery and equipment, because that's real property. Yeah, we get that question a lot from manufacturers. We get that one a lot from farmers as well. Now, let's say there's a manufacturing company that is making some kind of plastic thing. I don't know. Maybe they're making these plastic bottles for these Diet Mountain Dew bottles. So I'm making, and I have a whole big bin of these the plastic beads, you know, that they put in a hopper to melt. And part of this manufacturing process is I have to take this bin, pick it up, and dump it into this big melting thing. And so I have a forklift that I use every day to do this. It's part of this. It's exactly directly involved in this manufacturing process. That forklift is manufacturing. So if I have to repair that forklift, maintenance on it, that's going to be exempt under manufacturing. That forklift would be. Even if I use it just incidentally to unload a truck here and there, you know, but primarily it's used for that manufacturing process. So just letting you know. Now, other forklifts, you know, not all my forklifts could be that, you know, because it's one bin, but so just letting you know, FYI. There's certain things like that. Things that that are not exempt would be like safety equipment that the employees have to pay for. Now, if the manufacturing company pays for the employees' safety equipment, then that would be exempt if it's used directly on the manufacturing line. But anything away from the manufacturing line that's a step removed would be taxable. If they have a computer that's used directly on that manufacturing line, the computer there and the software to run that, only used for that, that's going to be exempt. They have a computer in the back office that has part of it used for that and part of it used for something else, that won't be exempt. So that's going to be a fine line there. So see if I had any other questions. Anyone have any questions on the agriculture? Like fencing, if you install a fence, that's going to be taxable for a farmer. You pay tax on the fence, on the materials, and collect tax on the installation. That's usually a big one that that's a good reason to use that invoice, all applicable sales tax included. By the way, that language means if it was taxable, I collected the appropriate amount. If it wasn't, I didn't. All right. Well, if you guys think of another exemption, let me know because I can always come back. I'm not sure if anybody works on appliances like refrigerators, washers and dryers, microwaves, that type of thing. Those are tangible personal property. So that's not real property. It's not installed into the building. And so that's not going to follow the rules of construction contractors. That's going to follow the rules of regular retail business, retail sales. So what I mean by that is it won't have a designation for residential or original construction. It'll just be, I collect sales tax on the final charge to the customer. And that's another good one to use, all applicable sales tax included, because people will confuse that one with construction. They'll say, hey, wait a second, it's residential. You shouldn't be charging me on that. Well, it's a refrigerator. And yeah, that one is basically tangible personal property. So just letting you know on that one, which means, if it's, let's say I'm working on a dryer, a freestanding dryer, I can go buy the parts for that without sales tax because that's retail sales. That's tangible personal property. That's not construction. Okay. So just FYI. That's not like construction where I'm the end user. Remember, that's different because I'm not working on real property there. Okay, now the tools that you guys, use to do what it is you do, when you go buy those, you're considered the end user of your tools and equipment. So when you buy those, you'll have to pay sales tax on those, or possibly compensating use tax, if you bought them outside of the state. When you rent tools, you would owe sales tax on that as well, because the statute for purchasing is also for what they call renting or leasing, and they use those terms interchangeably. So if you rent a piece of equipment, you're considered the end user, so you'd owe sales tax on the rental of that tangible personal property, that equipment. So let me see, as someone who works electric, can you back the dryer example? Go back to the dryer example. Okay. Okay, what questions do you have on that? If you work on a dryer, so if you're repairing the dryer, that one is working on a piece of tangible personal property, the dryer. Now, if you're working on something attached to the wall, let's say the working on the dryer isn't really working on the dryer, it's I'm putting in the outlet for a dryer. Well, now I'm really not working on the dryer, I'm working on real property, I'm working on the building. Well, now that would fall under the contractor. But if I'm working on the dryer itself, that's tangible personal property, since it's not permanently affixed, what they call permanently affixed to the building, to the real property. So it's not permanently attached to this real property. It's just this freestanding tangible personal property. So when I'm working on tangible personal property, so that's retail sales. Retail sales in a nutshell is I can buy what it is I sell. I can buy that without sales tax, and then I collect sales tax on the selling price, the total amount I charge my customer. So that's how that would work. And so, yeah, I can go buy my parts. If I'm repairing a dryer, and I'm working on a dryer, if I work on dryers and refrigerators, that type of thing, something not affixed to the building, I can go buy those parts without sales tax, but I have to collect tax, when on my cost of what I charge them. Now, if it's built in, affixed to the building, that's where it changes. Then it's part of the real estate, and then you fall back under the rules for contractor, where pay tax on materials, no tax on the labor if it's residential. What is this? If you pay sales tax on the parts, you do not have to pay at the end of the quarter to the state for that. I don't quite understand that question. Maybe you're asking on an appliance. Maybe I'm working on an appliance, and I didn't know that I could buy those without tax, so I paid tax on those. Do I have to collect tax on the whole thing? And the answer is, well, yeah, you'd still collect tax on the whole thing, and you can apply for a refund for the tax you paid on those. But yeah, you still have to collect tax on the gross receipts. But those materials, those parts are not part of contractor, so you wouldn't report them under other allowable deductions like you would materials for contractor materials. I'm not sure if that's what you were asking.
Did you see she reworded her question, Carl?
Oh, no, let's see. If I buy parts for a dryer and I don't pay tax up front in the store, but charge customer, don't you have to pay the state for their part of sales tax collected? You are collecting, yeah, if you buy the parts for a dryer, you will collect tax from the customer on the total price. So there is no designation on materials and labor for that. That's retail sales. That's just like the same as buying a pop. I buy the pop without tax, and I collect tax on, I mark it up. I buy it for $1. I sell it for $2. I collect tax on $2, and then I pay the tax on $2 to the state. And that's basically what you're doing there, except yours is, well, I bought the parts without tax and I charge them however much to install it. To us, it's, well, the one price. You'll be remitting the tax on the final charge to the state. So that's the difference with that type of thing, retail sales compared to construction contractor. So in a lot of ways, it's easier, but it's, it ends up being a little more actually because of the sales tax. But if it's physically built in, then it's real property, and then it falls back under the contractor rules, where the two parts to the contract. So you have it complicated. So sorry about that. This is Mary. So sorry, Mary. If you have more questions, let me know too. Let's see the tools and equipment. So if you have a project exemption certificate and you rent a piece of equipment to use on that job with the project exemption certificate, you can rent it with that project exemption certificate without sales tax. Can't buy it. You can't use it on any other job anywhere else. You can use it only on that project, but you can rent it without sales tax. That's a pretty good deal. A lot of contractors didn't know that. Now, in normal every day without a project exemption certificate or anything else, if you rent a piece of equipment, you have to pay tax on that. You're the end user of all tools, equipment, that type of thing. Now, a lot of times a contractor will rent a piece of equipment and then they'll pass that, they'll even line item that to their customer. Hey, that's just part of the tax base at that point. It's part of the gross receipts. Well, I paid tax on that. Yeah, but now it's a line item. Remember, it's part of gross receipts. Since you added that to the receipt there, since you added that to the cost. So if it was a taxable job that you're charging your customer for, it then becomes part of gross receipts, and yeah, that becomes taxable. So I'm letting you know that. Now, and when I talk about the tax base in the contractor book, one page you might want to dog ear, and that is, I believe it's page 16 in that book, and it talks about the sales tax base. And for contractors, the sales tax base, what we mean by that is out of everything I charge my customer, what portion do I collect sales tax on? That's really what we talk about by the sales tax base. And so what that is out of everything I charge my customer, I subtract out of that any tax paid materials that I purchased and any tax paid subcontractors I hired. Whatever's left, that's the portion I collect sales tax on a taxable job. So if you've ever worked with a general contractor, or if you've ever been a general contractor, or actually it's page 18, I'm sorry, I got the wrong page. You'll hear, I've heard general contractors say, well, they shouldn't charge me tax because I'm collecting tax from my customer. That's double taxation. Well, if you just heard what I said, that means they're doing it wrong. So if I'm a general contractor and I hire you, really, I am nothing more than your customer. Yeah, you're called a subcontractor, but you're a contractor. So on a taxable job, you are going to pay tax on your materials, and you're going to collect tax on the labor to install it from me. And as a general contractor, I'm going to ask you to invoice me with that invoice that says all applicable sales tax included. Because if you do something wrong with the sales tax, now you're held responsible for that, not me. And as a general contractor, I like that because, if I didn't do that and you did something wrong, then as a general contractor, I'd be responsible. So I want you to be responsible for that. So just invoice me all applicable sales tax included, because now I have an invoice that shows that I paid all applicable sales tax. Anyway, so now you're going to pay tax on your materials and you're going to collect tax on the labor to install it from me. Okay. Now I'm going to sell it to my customer. I didn't buy any materials. Okay, so I get to deduct out, remember, what you charged me. I'm going to mark up this job a little bit, so I make a little bit of money on it. That means the only portion I'm going to collect tax on is that little markup section. And again, I'm going to use all applicable sales tax included on my invoice to my customers so they don't see my markup. That's how that works. So you see, that wasn't double taxation. It was only the parts that weren't taxed that got taxed. That's how that works. And that's on page 18 in the book. It talks about that under the sales tax base. Another important part, it talks about the things about tax base. Very important part, it says, like any other retail business, your profit, including the markup of materials and overhead costs, are figured into the total charge to the customer and therefore subject to sales tax. A contractor may not deduct overhead expenses when figuring the taxable amount of the labor service portion of any contract. Non-deductible overhead items include building permits, consumable supplies, such as form lumber and sandpaper, employee labor costs, rental or lease payments on tools, equipment, and machinery, which I just told you about, office supplies, per diem, travel expenses, sewer hookup fees, utilities. One thing that'll be taxable, even on a job, if you have a project exemption certificate, a couple things: a freestanding storage container and porta potties. You're always going to be taxed because you're the end user of those. Pardon the pun. So just letting you know. So that's a
Here,
good
Carl,
page.
this, I think, is the voice of experience. Mention that if the customer doesn't get a project exemption certificate in place before the work starts, it's not retroactive.
No, well, unless it's one of those, normally, that's a good way to think of it. Unless it's one of those enterprise zone. And how you would know that is if it's a for-profit business. That's how you would know it was one of those. If it was like a manufacturing business, something like that. But if it's a nonprofit business, then you know it's not retroactive. So most of the time, 99.9% of the time, it's not retroactive. You're absolutely right. Oh, I forgot to mention that there is an exempt entity certificate out there. It's called a by or on behalf of exempt entity. I don't have a picture of it. I need to put one in there. And there's not that many entities that have them, but they have the ability, their exemption, instead of saying that their exemption is for direct purchases only, it actually says that their exemption covers indirect purchases. So what that means is if they give you one of their exempt entity certificates, let me go back and show you what the exempt entity, one of these, it looks like this, but the wording will say that their exemption covers indirect purchases. There'll be some wording on there that'll tell you that a contractor may use this in lieu of a project exemption certificate. So that you don't even have to have a project exemption certificate because indirect purchases are exempt. So when you're using that, you're just like, you're one of them. There's not that many indirect or buyer on behalf of entities out there, so you might not ever come across it, but I wanted to make sure and mention it just in case you do, so you didn't think that somebody's trying to fool you or something, because that one is out there. It does mention on there that it is recommended they do get a project exemption certificate, and a lot of them actually still do that because they like that process for record keeping. But just let you know that does exist out there. It's called by or on behalf of exempt entity certificate. So just let you know. I think the ones that have it are like the domestic violence shelters, humane shelter, rural volunteer fire department, Easter seals. I think that's the big ones I can think of. There are some other ones that are buyer on behalf of, but they're not able to actually get project exemptions. They're not able to do real property projects, in other words. And in fact, they're not even able to do, they're not exempt for services. They're only exempt for tangible personal properties on some of those. So. So yeah, if you do, or get a piece of equipment, rent it, you pay tax on it. Now, if you rent a piece of equipment and it comes with an operator, don't think of it as equipment anymore. Just think of it as a subcontractor. And so then think of it, okay, let's look at this. First of all, two things. One, is what they're doing taxable? So one of the things that we look at a lot of times, like HVAC guys, maybe they have hired a crane operator, which when they rent a crane, a lot of those come with a crane operator because they don't want a knucklehead like me operating. I'd probably run it into everything. So they provide their own operator. And that's all they do. They won't get out and install anything. Now, if they did that, now a little different, but let's just say that all they do is provide an operator with that. Well, it's a subcontractor, and all he's doing is taking that unit and moving it to a roof. That's all he does. He's moving this. That's not a taxable service. Doesn't matter what kind of job it is. Doesn't matter if it's commercial. Chances are it probably is if he's doing that. But it's not taxable. Now, if that crane operator also is, well, I'm part of the crew now and I also help install it. And well, now you got to look at, okay, now is that labor taxable? Because now he's doing labor. So you got to look at that as well. But if all he's doing is, so if he's doing something not taxable, no problem. But if he's doing installation as well, you got to look at the labor. So that's why I'm saying you got to be careful with that if it comes with an operator. So basically, I've browbeat you about this, but you're going to pay sales tax most of the time on your materials. There are the exemptions. The integrated production machinery equipment, we were talking about the project exemption certificate. Then you're going to collect tax on the labor if the job is a commercial remodel job. If you're doing residential, no tax on the labor. If it's original construction, remember those 5 definitions. And then you're going to take an exemption certificate. And that's that. I forgot to mention, I already forgot that, the public water supplier. Is there anybody that works for public water suppliers? So that's paying the clean drinking water fee. They have their own certificate that they fill out. It's not issued. It's an ST-28EE. It's just like a project exemption certificate. So if you're working for a public water supplier and you're working on their water stuff, they will give you a project exemption certificate that'll exempt your materials and labor. It's a very specific certificate. You don't see it much. It's that ST-28EE. It's not even in our book. It's very specific to them. It's for those public water suppliers that are paying the clean drinking water fee. And I don't have very many folks that have come to class that are working on that because it's very specific. But if you are, just let me know. But your materials and your labor are exempt, just like a PEC. In the book, the page 16, that is they call it a decision matrix, but it's a flow chart. If you answer no to all these, at the very end, that means you're going to pay tax on your materials and collect tax on the labor. What this really does is try to jog your memory if you're going to any exemption at all. Now, this doesn't cover every scenario out there. It just covers the big ones. I could put a whole lot more in there. I just need more time. I'd like to make some industry specific ones, like for someone said they were electrical worker or electricians. I'd like to make one for that. One I'd really like to is I think somebody here was concrete. People that do gravel and rock, excavators, very complicated. I'd definitely like to make one for that. But anyway, this one's just kind of generic in nature. But if you just want to look and see, well, I'm doing this job. Is it for a public water supplier and they have that ST-28EE? Most of you are going to say no, you'll go on to the next one. And then you're going to say, well, is there a PEC? Is there a project exemption certificate? Remember, there's more than one. There's that regular one that is for nonprofit organizations. That's like cities, counties, political subdivisions, that type of thing. Those you cannot backdate. If it's for an enterprise zone or an HPIP, those ones, they don't backdate them. You're just able to get a refund. And it has its own refund form. So you can't get a refund on that form for anything else but that particular job.
What about material hauling? A dump truck hauling taxable material, rock, dirt, etc., to a job site or a residence.
Oh boy, you're going to fall under just about every aspect of sales tax. So are you selling the rock? Are you just hauling the rock? Or are you installing the rock? That's really what we're looking at. So here, let's say I am going to go buy some rock and I'm going to go sell it and deliver it to somebody. and all I do is dump it in a pile. That's a retail sell. So I'm going to go buy the rock without tax. I'm not installing it. I'm just dumping it for them and going. That's a retail sale. So I will collect sales tax on what I charge them, the final cost. That includes the charge for the rock, and if I charge them a delivery fee. Remember, total cost. And that doesn't matter if it's residential or not. That's a retail sale. Okay, that's one scenario. Next scenario. Well, now they said, nope, what I want you to do is to spread that out and take a tamper and smooth that out for us. Well, now I'm installing it, but it's residential. So now I'm going to go buy the rock and I have to pay tax on it. So I owe the tax on the rock. And I'm going over there and I'm installing it, but it's residential. So there's no tax on the labor. So that's the next scenario. Another scenario is, well, could be that way for original construction as well. Next scenario, if it's commercial, well, okay. Same thing, I'm going to pay tax on the materials and then I'm going to collect tax on the labor if it was commercial. Okay, there's another scenario. Well, a lot of times there's a commercial job, a guy will call you and say, well, we paid for some rock. I need you to go pick it up and just haul it and dump it for us. We got our guys waiting. They're going to go install it. I just need you to haul it. So all you're going to do is move it from point A to point B. That's it. That's hauling. That's not taxable. That doesn't matter if it's commercial or not. You don't care. That's just moving this stuff from here to here. You're not installing it. You're not selling the rock. You're moving it. That's it. So you have the possibility of hitting all these different factors, is what I'm saying. So you gotta kind of like take a deep breath and look at what you're doing and what they're asking you to do. So you may have one of the more complicated industries as far as hauling, and people would think, oh, that must not be no, it's more complicated. It's more complicated than plumbers, more complicated than electricians. So did that answer the question? So if we
Okay,
bought
so
rock,
if we bought the rock, paid tax on the rock, hauled it and dumped it, but didn't spread it on a residential project, is that a taxable haul?
well, you should have bought it without tax because that is retail. You're selling the rock. Is that what we're saying? You're selling them rock.
They hauled it and dumped it, but didn't spread it. So it sounds
But
to me
they-
like
but-
maybe they're just transporting.
Well, they bought the rock though, right?
Yep.
So you're reselling rock. So you should have bought the rock without sales tax. So that is a taxable. So yeah, you would collect tax on the rock on what you sell it for, even though you paid tax on it. And then you can apply for a refund on this tax you paid on it. I know that's a pain in the neck. It's the KS-1220 is the refund form, refund booklet that has the refund form in it. But yeah, so what you did was a retail sell because you bought it, dumped it, and went. They're going to do with it. That's a retail sell. Doesn't matter if it's residential. Now, if you would have installed it, meaning you're going to tamp it down or put it in something, now you deal with, okay, now is it residential? Now you got the two parts. So if you're installing it, but just dumping it, that's that's like leaving it at the doorstep. That's just hauling it. And so that is that's delivery. So that's your retail sale. Yeah, and if your customer doesn't get that PEC, that's a good point. If there's not a PEC in place, they're going to be taxing. So yeah, you want to make sure get that PEC in place if you're working on a tax exempt job. What if we make the rock and haul it, but don't spread it? But you're selling the rock, right? I mean, so if you're making it, you're selling it. So you're still, that's retail sale. So whatever you sell it for, that's what you're going to collect the sales tax on. So that'd be just like instead of selling Oreo cookies, I make my own Oreos, that type of thing. Just more calories than the rock. I had nothing but bad jokes, sorry. Kelsey, you got a really good point there. Kelsey made the point that that if their customer won't get a PEC in place before the work starts, that it's not retroactive. I see what you were saying. So you can't, it doesn't do you any good if that PEC is not in place. In other words, you've already started working and then they come back to you and say, well, here's the PEC and you've already done everything. You can't go back. So yeah, make sure you get, tell them, hey, I need that PEC. If they're, that's a really good point, Kelsey. That's a very good point because I've had a few people have that happen to them and you can't help it, And by the way, these are the rules. I mean, I'm just reading the rules out of the box lid of the game and that's all you can do. It's not your fault. These are rules. So just, give them my number and say, hey, Department of Revenue. And I always say, well, it's the legislature's fault. Well, it's not even their fault because these rules were written before they even got in there, But so who's to blame? Who knows? It's just the way the law is, and we all have to follow the rules. Let's see, what about inventory? For example, if we purchase pipe for inventory purposes to use on job site, some taxable, some not, do we pay tax on the pipe when we buy it? Well, normally you would, unless you're a retailer contractor, normally you'd pay tax on your pipe. Now, if you're a retailer, what they call a retailer contractor is you stock an inventory and have a showroom floor and I can come buy pipe from you, that type of thing. Then you buy it without tax and then just remit it on your sales tax return when you act as a contractor. Now, I believe in that scenario, you probably could do that, but you'd have to remit it on your sales tax return. So it sounds like you do you sell pipe without installing it? Is that what you're saying? Or when you say taxable, you have some jobs that are under like a project exemption certificate. Okay, so no, we buy it, inventory it until it's used on a job site. I don't. I'm not sure what percentage you have as exempt. If it would have to be a large percentage being exempt to buy it exempt. Because I'm guessing most of the time that you're going to owe the tax on the materials. Because a contractor owes the tax on materials. See, someone else. You're always welcome to write a letter to get it in writing to see about what they thought about buying that inventory without tax, if that would qualify. Yes, someone, let's see. I'm sorry, Taylor, I didn't have a very good answer for you there. You have some good questions, though. My hat's off to you for the hauling stuff, though. I'll tell you what. See, if replacing a part to the tangible personal property, You don't have to pay sales tax on the part when you buy them. Oh yeah, I've already said that one. Okay. If you pay sales tax on the part, oh, I'm way behind. Sorry about that.
So they say they buy the pipe and inventory it, then they install it either on PEC projects or farm terraces.
Farm terraces are taxable. PEC, if there's a PEC, that's exempt. Farm terraces are taxable though. That's installed in the ground. If I'm understanding what a farm terrace is, it's installed in the ground. Is that, am I correct there?
That they pull from the same inventory.
Right. Right. So if you bought them without tax, I mean, you'd have to buy them. If you bought them without tax, you'd have to report them on your sales tax return when you do taxable. But technically, I have to give you the technical answer, the technical correct answer, which would be, you know, technically what the law says is, but I'm trying to think what trouble if you, you know, you bought them and have them there, you're going to pay tax on them when you install them. Which would be, you know, your cost, what you paid for them. So you have to definitely keep an inventory and keep receipts on what you paid for them, because that's what you owe the sales tax on, is your cost. Oh, Taylor and you work together. So you two are ganging up on me. I see how that is. Okay.
Tag team.
I'll tell you what. What part of the state are you guys from? I kind of miss going out. I miss my restaurants I get to go to. Oskaloosa. All right. So an average cost. Oh, yeah, dollar cost averaging. They allow that as well. I kind of see what you're doing as far as the exempt. I know that they have allowed that before. As far as what you're saying, we do a large number of jobs that are exempt, PEC jobs, that type of thing. So I have seen where they have allowed that, where they bought them without tax, and then just on that just for that item. I don't know. You probably have probably some fittings too, I'm guessing. But then when they use them for anything else, you know, that's taxable, they just remit it on their sales tax return like a retailer contractor. So you're paying the tax, you know, that either way, you're paying the tax. Just keep your receipts is the main thing on your purchase price, and then remit it on your sales tax return when you do it. But yeah, that's one thing they do, that dollar cost averaging. A lot of times they do that. I'm trying to think. I think pipe is one of them, because sometimes these places get such a large inventory. Sometimes they don't know the cost that they paid on it. I think wire is one of them, that electricians get these large spools of wire, and sometimes they'll do that dollar cost averaging on that. Yeah, I imagine. It's stated that it's cheaper in bulk and hard to track a piece. Yeah, yeah. When I talk about this, the sales tax, I'm giving you one little bitty example, and you guys are talking about, you know, these large. So trying to apply this, I have the easy job of giving you what these rules are and then trying to make this fit into your industry. That's really the hard part. So yeah, I totally understand what you're saying. And that if that works for you, do that because that'll work. That'll be fine. Main thing is sort of like math class. They always said, show your work. That's all you got to do is make sure you just show. Because remember, the burden of proof something is exempt is on you, or that you've paid tax. So just always show your work, show your inventory, show what you paid for it. That's all you got to do. And so good record keeping is basically what I'm saying is. I don't advise putting a bunch of receipts in a shoebox. That really is not going to be good for you. But if you can be organized, if you can keep it, if you can keep it electronically, it does say that you can do that. If you have handwritten, it still allows for that as long as it's, organized. We still have folks that do that, but they're organized. So whatever works for you, Yeah, I was just going through that decision matrix, and that basically, if you answer no to all of those, you have to collect tax on the materials, pay tax on materials, collect tax on the labor. Are drawings or engineering for construction considered taxable? Well, if that's all I'm doing, no. So, but if it's part of what I'm selling, it's part of my gross receipts to something that's taxable. So if it's because of this, I do this drawing, and then because of this, now I drew this. I don't know, heat exchanger. Now I'm installing the heat exchanger here. Now because of this, it's part of this. It's part of the gross receipts then. But if I'm just a separate company that I do the drawings and engineering, and that's all I do, that's not a taxable service. So do you understand what I'm saying? So in itself, no, but as part of gross receipts, it can be. So those gross receipts can really get you. So one question I usually get is, well, especially like on the testing, well, what if we go back and do it the next day? It doesn't matter if it's the same company, it's still going to be taxable. But if it's a separate company, or if it's the reason you're doing the work is still related because of that testing, that's going to be taxable. But if it's totally unrelated, no, that's not. It's two separate things. No problem. And there's my contact information, by the way, my phone number, my email. So if you have a question, feel free to give me a call or an email. I am gone frequently teaching. With that said, don't feel bad. I don't mind answering your questions, and I will get back to you. So now at least you have a contact, and usually get you a pretty good answer. So it doesn't. And if you would like to come back to class, especially if you've been to class, haven't been to class before, sometimes it might mean something different to you, a year down the line or 6 months or a year. Just because when you're out there, someone has a new scenario, someone might, make you second guess yourself. Plus, it's always kind of nice to refresh, make sure no laws have changed, that type of thing. And plus, we just like to see your smiling face again. So you're always welcome to come back. Is there any more questions? I want to make sure and get everybody's questions answered.
Hey, so Carl, thank you for the presentation today. I wanted to let everybody know we've had a lot of questions, so it's probably buried at the beginning of the chat. I posted the 1520 PDF from KDOR and also the 1525 specific to contractors. But I think another tool that I posted that gets a lot of traction out there is the sales tax facts sheet that you guys post on the Commerce website. That's a really good first place to go when you start thinking through sales tax questions and how they relate to your industry. That is also posted out there and accessible on the Department of Revenue site. And I'll attest to Carl York's availability. He's always very responsive when we have a tax question come up. If he's on the road traveling, he usually gets to it same day or the next. So if you need those to go through us, we're happy to help with that. And again, Carl's providing his direct contact information. It's been really great to work with. Appreciate everybody's time and due diligence today. I'm looking at this sales tax questions. Anybody have any last minute questions? Or Tom, would you like to say anything?
Just, we had several questions about sending out the presentation. We will email that out. And apparently some from last week didn't get last week's. We'll make sure to get that emailed out to all the attendees from last week's session.
Yeah, and these are hosted on the Kansas Small Business Development Center website, correct, Tom?
I believe so. Mindy, do you know?
I think I've seen them out there, actually.
Yeah, I think there's quite a few out there. I think the important consideration to keep in mind is that sales tax laws and questions change. And, you could tell from Carl's Q&A today how specific a drill down in a question can get. So not every one of your questions will be answered through the videos, obviously, but a good place to start, along with the fact sheet and the actual use guide. Okay.
All right.
Anybody, anything before we jump off here? Thanks, everybody. We appreciate your attendance today, and I hope you have a great afternoon. Thanks, Tom, and thank you, Mindy, and thank you, Carl York, especially for your
Yes,
great
Mr. York.
presentation. Great job.
Thank you guys. Thank you guys
Thank
very
you.
much.
Thanks, everyone. Bye now.
Thanks,
Bye-bye.
Mindy.